Concrete steps in getting an IUL. Hi there, I'm Cloud, your loyal golden retriever and financial friend. Today we're digging into something pawsome. How to make your money work harder than I do chasing tennis balls. This is the power of IUL. I'm here to help you fetch the best ways to save and secure your future. One poor step at a time. Want life insurance that can protect your family and let your money grow tied to the market, but without losing everything during a crash? Quick fact: IUL sales hit record levels recently. Carriers reported rising new premiums and policy counts as more consumers look for market-linked growth with downside protection. We'll show you exactly why, with real research and clear examples. If you're curious about protecting your family and growing cash value, hit subscribe. We break down complex money topics into real steps. Permanent coverage plus cash value linked to index. Upside with downside protection. Here's how the money flows. You pay premiums. Part pays the insurance cost, death benefit cost. Remainder goes into the policy's cash value. Cash value is credited based on an index crediting method, typically with a cap, participation rate or spread that limits how much of the index's gain is credited. That's how insurers offer upside while still protecting against downside. On-screen examples. Cap equals 10%. Participation rate equals 80%. Floor equals 0%. Major benefits, research plus stats. Why people choose IULs. Real benefits backed by research. Tax-advantaged growth. Cash value grows tax-deferred, and policy loans/withdrawals are often tax-free if structured properly, not a modified endowment contract. The life insurance death benefit is usually income tax-free. See IRC definitions and tax rules. Downside protection. Many IULs have a guaranteed minimum crediting rate, commonly 0%, so your cash value doesn't lose credited interest in down markets. But note, policy values can still be affected by fees and insurer changes. Flexibility. Adjustable premiums and death benefits can be useful if your cash flow changes over time. Growing popularity. Demand evidence. IUL sales reached record levels recently. New premiums and policy counts rising year over year as more consumers seek these hybrid products. This indicates growing consumer interest in IUL features. IUL new premium reached $3.8 billion in 2024, LIMRA. Risks, costs, and what the research says. IULs are not risk-free, and many reputable sources warn about their complexity and cost fees and charges. Administrative fees, cost of insurance, surrender charges, and commissions can reduce cash value growth. These make IULs more expensive than simple term life or low-cost retirement accounts. Crediting limits, caps, participation rates, and spreads limit upside. You won't get the full index return, and insurers can change crediting methods over time. Premium risk, lapse risk. If market credits are low and fees are high, you may need to pay more to keep the policy in force. If the policy lapses with outstanding loans, tax consequences can occur. Many advisors recommend maxing out employer 401k matches and tax-advantaged retirement accounts before considering IUL, especially for individuals with limited cash flow. It fit best for people who already have strong retirement funding and want tax-efficient additional vehicles. Have you thought about the fees in your current insurance or retirement accounts? Comment below fees if you want a video showing how to calculate the real cost of an IUL. Let's bust some common myths. Myth 1. IULs guarantee big stock market returns. Fact: IULs can capture index gains, but with caps/participation rates, you will not receive full market returns. Myth 2. IULs protect you from all losses. Fact: many have floors for credited interest, but policy values can still decline because of charges or poor crediting. They aren't the same as holding cash or guaranteed annuities. Myth 3. IULs are always better than 401ks, IRAs. Fact: not always. For most people, employer-matched retirement accounts and low-cost IRAs should be considered. IULs does not compete, but complement many strategies in your financial portfolio. Myth 4. IULs are scams. Fact: they're complex products with both pros and cons. They can be appropriate for some goals, but they require careful design and transparent advice. Reputable consumer resources, e.g. FINRA, advise understanding complexity and costs before buying. Type myth if this cleared something up, and share this with someone who's considering a policy. Who might benefit most? Suitability: young professional, business owner, high-income saver, multi-generational family who might use an IUL well. Typically, high-earning individuals who already max out retirement accounts and want additional tax-efficient growth. Business owners looking for flexible executive benefits or wealth transfer planning. Families who want life insurance plus a potential tax-efficient source of supplemental retirement income, but only if they can pay premiums long-term and understand the policy design. Warning: if you're on a tight budget, prioritize protection, term life, health insurance, emergency savings and retirement accounts before complex permanent insurance. How to shop for an IUL. Practical steps. Understand total cost. Ask for an illustrated net cost or a side-by-side projection showing conservative crediting scenarios. Ask about caps, spreads, and participation rates. Get examples of how index performance translates to credited interest. Check surrender schedules and loans, no penalties, and how loans affect death benefit. Confirm tax treatment and MEC rules. Ask your agent whether the design risks becoming a modified endowment contract, MEC. Compare to alternative uses of funds. Could this money be better used for emergency savings, paying off high-interest debt, or tax-advantaged retirement accounts? Work with a fee-based fiduciary advisor or licensed independent agent. Ask for clearly stated assumptions and stress-tested scenarios. IUL can be a powerful tool, but it's not magic. It's a hybrid product, insurance plus market-linked growth with trade-offs. Use research, ask hard questions, and prioritize basic protection and retirement vehicles first. Like, subscribe, and share this with someone who's asking about life insurance for retirement or family protection. Salamat. See you in the next video. Links to sources used: LIMRA, IUL Sales 2024, Investopedia Overview, FINRA Consumer Guidance, IRS 26 USC 07702, Insurance Geek Tax Notes.